When I present on stage, a little experiment I like to do is to ask the audience to put their hand up if they know their grandfather or grandmother's name. And most people put up their hand. Then we ask, do you know your great-grandfather or great-grandmother's name? And a lot of hands go down. And then you ask, do you know your great-great-grandfather or grandmother's name? And almost everybody's hands go down. Do you know whose great-great-grandkids 100% for sure know their name? John D. Rockefeller. Why? Because they're still getting paid off the legacy he set up more than 100 years ago. This is a tremendous legacy. Would you like to build and leave a legacy so that your grandkids and great-great-grandkids all know your name, even if they never meet you? Well, today's strategy video shows you how to set up what I call a waterfall of wealth that will leave a lasting legacy for your family for years to come. So now what we're going to do is use a tax-exempt life insurance policy with cash values to put insurance protection on your child or your grandchild or both. And we do this to give a tax-efficient way to grow your wealth now and transfer it to the next generation when you're no longer here in the most tax-efficient way. We structure it in such a way that when you pass, the life insurance that you own now will transfer automatically to your kids or to your grandkids. And when we set it up so that you can benefit from the cash value growth right now to invest and to spend while you're alive. Why are we using life insurance? Well, when you transfer a life insurance policy to your child or to your grandchild whose life is insured under that policy, there's generally an automatic tax-deferred rollover. And this is a unique feature of life insurance that's not available on other types of investments that are typically deemed disposed at fair market value when they're transferred to the next generation, right? So that could be stocks or houses or whatever. This waterfall of wealth insurance strategy is based on this tax-deferred rollover rule that's available for transfers to a policy owner's child or grandchild. The cash value growth that's inside the policy that I just talked about is tax advantaged compared to other investments, which can be subject to income tax or capital gain. So you're winning all around. How does this waterfall strategy work? Well, number one, you, the parent or the grandparent, buys a permanent insurance policy on your kids or grandkids. And then two, you fund the policy with cash that you were going to leave them for school or down payment or starting a business or whatever life event. This is your legacy. And then three, in this situation, you're what's called the owner of the policy and your child or your grandchild is what's called the life insured. And then four, when we set up the policy, we name your child or the grandchild as a contingent owner on the policy, which means that when you pass, they automatically become the policy owner. And this allows that tax-free ownership transfer to the kid. And number five, if you want, you can also transfer the life insurance policy to your child or grandchild while you're still alive so they can access the policy cash value. So now remember, the insurance is on them. So you're also setting up the following generation because when your child or grandchild passes, there will be a life insurance payout to their kids or to whoever beneficiary they choose. So now 3 generations in your family have benefited from this one insurance contract. And so now when I say your child or grandchild, I obviously mean your kids, but we're also talking about the definition of child as defined in the Income Tax Act, which makes space for different types of grandparent, parent, child, family structures. So now here's something cool. The child who receives the policy doesn't have to be the same person as the child who's insured under the policy. For example, you as a grandparent can buy a policy on your grandchild and then transfer the ownership to your child, their parents, on a tax-deferred basis. So the next question becomes, can you do this on someone who's not directly your child, so maybe a niece or nephew? Yes, you can, but not in the exact same way I just talked about. But you can do it using a trust. So as long as you make sure the trust is properly set up, and obviously your lawyer can advise on this. Now, I know that some people feel some sort of way when we're talking about insuring kids, and that's fine. But think about the massive legacy you could produce if you were the one that set this up for your family. So you, as the parent or grandparent, sets up this permanent insurance on your child or grandchild, and you can use the cash values now while you're still alive, and then when you pass, it transfers to your child or grandchild, and they can use that as cash values during their life. And then when they pass, the insurance pays out to their beneficiaries, which we're assuming are going to be their kids. So now ideally, you're passing on more than just money here, and you've taught your kids how this strategy works. So you want to teach them the importance of keeping this waterfall going so you can impart on them the importance of using the death benefit from the insurance payout to put insurance on all of the future kids and grandkids, and so on for generations. If you want to get really sophisticated with something like this, you can start talking about holding the insurance inside a trust or a holding company, but that's way beyond the scope of this video. And I can't give you advice on that, but you can talk to your lawyer and they can give you advice on this, on how to set up these types of structures. And if you need an introduction to a good lawyer who understands insurance, please reach out to me and I can connect you to some good ones anywhere in the country, because obviously not all lawyers understand insurance and you want to talk to a right lawyer who does. This waterfall of wealth benefits each generation involved. So for you, the parent or grandparent, number one, you get to keep control of the life insurance policy. Number two, you can reduce your tax on some of the other investments by redirecting them into a tax-advantaged insurance policy. So say you have a few $1 million in a portfolio, you can take some of those funds and wrap them up inside an insurance contract. And then while you own the policy, you can access the policy cash values. And then so for the kids and the future generation, when the ownership transfer happens, they get the permanent insurance for their family and they can access the cash value to pay for things like education or a house or real estate or their own retirement or continuing the financial legacy that you've started for the next generation. So this is the waterfall of wealth strategy that we like to use. It's a great way for you to pass money down to the future generations that's secure, tax efficient, and still gives you control of funds while you're alive. You get to be John D. Rockefeller that starts out the family legacy. Your grandkids will know who you are when they receive that check. So now, if this is something that you want to set up for yourself and your family, please reach out to us on our website. It's safepacific.com/contact. That message comes straight to me. I'll reply within 24 hours and we can take next steps. Before you go, please do all those things the algorithm likes. Hit the like button, leave a comment, share, subscribe. All of these things really help these videos get the reach out to more people who need to see this information. Thanks for watching, and we'll see you next time.